Good evening, everybody. Can everyone see my screen and hear me? Great, thank you, Rob. Let's go ahead and get started. Just a reminder, the purposes of these beginner circle webinars are to help people get acclimated to Elliott Wave and using our various sites and services. In addition to kind of giving a broad overview of the current views for a lot of the Elliott Wave counts for things that are covered in the Market Pinball Wizard or in the market service on EWT. But those questions that are related to understanding Elliott Wave a little bit more or helping navigate and find some things still get first billing, if you will. But with that in mind, we'll go ahead and do what we usually do and get started talking about the broad market. And what I wanted to focus on today is that when you have competing counts or an alternate count, like for example, Avi's green and yellow, I find it incredibly helpful to look for the points where those overlap. So let me actually pull this up now, if I can. We'll move this over here, and I think this is the right screen. There we go, that should be good. Can probably size this better for you guys to see. But here we have Avi's 60-minute SPX chart. And before we get into talking about where I see things in the big explainer, you know, there's some people that get upset when there's no alternative given, which I get that a lot because I try and limit the amount of different things that are showing up on the chart because I find sometimes it's confusing to me, even though we color code things and try and maintain some consistency by degree. But other people just want to know like what else something could be. They want an alternative interpretation on almost every chart. So Avi is more willing to comply with that. And so he gets some grief from people saying, well, you just show a chart that's a chart that has a bullish and a bearish alternative. And I think Elliott Wave is far more nuanced than that, and particularly the way that Avi presents things. So, you know, you guys are familiar with the green count where Avi shows a possible 5-wave move to the downside as of wave 1 in the start of a C wave, and looking for more of a consolidation as the wave 2, even though we've gotten to the very early part of the initial part of that targeted retrace region for wave 2. This is a bounce wave 2 because it's in a bearish count. But the more ideal would be to get a B wave and then a C wave of a wider flat before that would start the first wave inside the third in that green count pointing to the downside. The alternative is Avi's counting this move as what looks like a stretched out fifth of a C wave. So you have an A, B, small 1, 2, a normal 3, high 4, and then a stretched out fifth to get that as 3 waves down instead of 5 waves down, and calling that a 4th wave in a larger diagonal. So that means he can get an ABC up for the final 5th wave of that. But what I want to focus on is that the structure that he has here, since most A waves are going to be an ABC move, the possible ABC for that yellow A wave is only marginally higher or a little bit different than the same green ABC for wave 2. So in my view, the way that I look at charts like this, or when I do my own analysis and looking at risk skew, it doesn't make sense to try and trade for 4,800 because especially when there's competing counts and we don't have a reliable, you know, setup to get to 4,800 from right now. If we get a retrace here, then we have a reliable setup to trade for the 4,500 region and maybe 4,600 region if it's the yellow C wave. From there, it should fade again as the yellow B wave, and then maybe you have a reasonable trade if that's a clearly corrective retrace to try for 4,800. So whether it's the yellow or the green, I think is something that you can push further out of your head and say, all right, we have a move down, we have a bounce off that low. Is that the start of something more bullish? If it's the start of something more bullish, it still needs a retrace. Even if it's the start of something more bearish, if it's going to set up for a higher bounce, then it should also hold a corrective retrace. So looking at this corrective retrace is what fits within both of those alternatives. And so that's what I want to look at a little bit closer. And then we can kind of talk about the broader overview that I see in the SPX, as well as some of those other charts. So let's go back to my SPX chart. And we can see that same, we're zoomed out a lot more. So we can see that same possible 5-wave move down that Avi's counting as all of the wave 1. And you'll see when we go to other charts, I'm less concerned about the potential for one more high, although I do have that as very faded dark potentials. But again, to get there, I think we need to hold a retrace, and we need to get past the resistance for the wave 2. So I'm looking at that first, and then if we get something that's more than that, then I'll look and see, you know, where that can reliably project. My preference, though, is that this is not 5 waves down, that this is only 1, 2, and an ABC for a 3, and this is a 4th, and we get one more low, and then the ABC. And there's some charts that Garrett and I look at in stock waves in terms of the individual sectors and some individual names where that counts better, but there's certainly some that agree with this as being all of 5 waves down here, and ideally getting the B wave and the C wave in a wider flat for the wave 2. So we're going to zoom in on that, but first, I wanted to look at two things on this larger chart. One, counting this as any degree 4th wave, I have a similar struggle with counting it as this 4th wave. Although this is better as a 4th wave and a move off of the October low, it's a little bit more reasonable in terms of a larger diagonal than I think this is. There's no corresponding wave 2 that is anywhere remotely corresponding to a reasonable size in my view, and too many other charts that I look at in stock waves and individual sectors very clearly look like this is confirming whether the top was made here or some things that made a new top here for all of that 5th wave. A lot of things look like that is a completed move, and I think that this counts as 5 waves down off of a significant top. It doesn't mean that a B wave can't try and nominally get higher. It really shouldn't be the case if this is a B wave inside a larger A wave of maybe even a larger A wave. Usually if the B wave is going to make a nominally higher high, then it is only the B wave. It's the B wave of the entire consolidation at that degree, and not a smaller degree B wave. So that's a little bit why I would really, really like to see this high hold. And other things that did look like this could have been a 4th wave of a C, instead of counting this as a completed WXY, to get one more high as the C of the B wave. A lot of those charts that Garrett and I look at have started to fail. But enough of that at the larger degree. Let's get into the nitty gritty off of this recent October low and see the key levels that we need to see hold if this is going to set up for at least higher in the bounce as the wave 2 towards that 4,400 to 4,500 region, or if it's possibly going to get above that into the 4,600 to 4,800 region. But probably, again, as we said, at first it would get to here, this region, and then it would need another retrace to get substantially beyond that towards the 4,800. If it is a wave 2, as we said, and this move down, and again, we're zoomed into a 15-minute chart so that we can look at the key fibs in detail just off of the most recent October low, which I think so far counts as only 3 waves up. But this is the fib retrace region, and as we can see, we're actually pretty close to a 618 retrace already. Normally, a sharp move up like this is going to be just the A wave, so that is still the preference if this is the wave 2, that we're going to get a deeper B wave and then a C wave up and a wider flat. So this takes us to a 100% extension. If we get a 78.6% retrace in the B wave, then we can get a measured move for the C wave and still stick that around the 76.4% fib. But I think we do have to be concerned if this is a wave 2, since we're getting very close to that 618 retrace, that it can be all of the wave 2. Now, the slightly other confusing thing in terms of my alternatives that I've presented are that I believe that this can be a fourth wave in a diagonal, which I want to zoom out just again a little bit, because I think that this fits very nicely as a fractal with the initial move that we got off of the January 2022 high as 5 waves down here. So I think this little jog here that could count as a fourth wave in 1, 2, 3, 4, 5 waves down off of the July high, I think is actually the B wave of the third. And that I think corresponds to this little jog right here, which is higher than an ideal fourth of a 5 wave down wave 3. But this can be an A wave, a B wave, and then a little bit of a muted C wave for that wave 3. And we have our high sharp wave 4, very similar to what we just got here off the October low. And then another ABC move down for the 5th wave of a leading diagonal off of the high. So that is the ideal that I would really like to see, is that this is a 4th wave holding in the 61.8% fib retrace region of this 3rd wave to the downside, and that we get an ABC drop as the 5th, and then from there we can get our nice Santa rally into the first part of January as a new ABC move up into that 44 maybe to 44.70 region as a wave 2. So on this chart, I have that highlighted as my preference, but I have the yellow 1 and a wave 2 moved over here, which I guess if this is only the A wave, this is probably going to get up higher as we showed on that 15-minute chart. But again, we have to hold as a B wave. And so the nice thing, again, when we're talking about that nuance potential and the overlapping structure, both of the charts that Avi showed you rely on holding a B wave here and then getting a move up. So that would ideally be the B wave of the wave 2 in yellow, or possibly something more bullish in his bullish yellow count. I use yellow as more of a cautionary or an alternate that's a little bit more bearish. Here, while this is a bigger wave 1, this is a more immediate start to a possible 3rd wave to the downside. So that's why that's my yellow alt, to warn that could be more bearish, and especially because we're already at, as we saw in the smaller time frame, a 618 retrace as 3 waves up that could even be all of a quick, fast, sharp wave 2 bounce. But in my 5th wave down, that should be an ABC move to the downside because it's the 5th wave of a diagonal. And the ABC that we should see down into this 4180, 4190 region in SPX is roughly the same, 4200, 4211 to 4160s that we would want to see as the B wave in that wider flat for wave 2 or in anything more bullish. So this is your key fib support region, and that's what most of the different alternatives that are high probability paths that we can see from the structure that we have off of the July high and off of the October low all point to either holding a retrace that should be kind of deep and then getting a swing move back up, or failing to hold that retrace, in which case it would be getting a new low for that wave 1 and then trying to bounce from there, with a slight risk that this was all of the wave 2 and that it dropped below this support region instead of just being a 5th wave down, which needs to be a clear ABC move down for that to clearly count as the 5th wave, and for us to look for another big bounce as a Santa rally. Could actually be, if this is a more impulsive 5 wave move to the downside, then that could really be the start of the 3rd already. So that's something that I will be on the lookout for as a cautionary thing, but not something that I'm actively trading for. I do think that we can get more consolidation in this region, whether we get one more low or not, from under 4,200 back up towards the 4,400s into the end of the year. I think that exhausted everything. I don't see any questions, so if something pops up, we can try to come back to this. In the meantime, I want to take a quick look at a few of the other index charts. Starting with NQ, if it'll let me type that in. There we go. Oops, I need to go to the back adjusted, which is the NQC. NQ got a little bit higher than ideal if this is going to be the same fourth. I do really like the way that this counts as all of the B wave, and it really is a little bit more clearly structured as an ABC for just the wave 3. And there's some of the individual sectors and individual names that count better that way as well, but got stretched up by a couple of things that reported good earnings to the higher limits of what is reliable for this to just be a fourth wave and get one more low as the fifth, and then our ABC bounce as the wave 2. So Ram asks, can you please explain a little bit more the structure of the ABC for the final fifth wave? So basically, it's very similar to what we're looking at here in NQ. An ABC for a fifth wave means that the entire structure is a diagonal. So a diagonal differs from an impulse in 2 major ways. One, the fourth wave is allowed to overlap with wave 1, and this is a diagonal pointing to the downside, so the fourth wave is a bounce here. And all of the subwaves, not just wave 2 and wave 4, are ABC moves. So we have an ABC for wave 1, we have an ABC for wave 3, and we expect an ABC for wave 5. So that's a diagonal structure. There's a lot of stuff in the getting started in the help section for more information on those diagonals. They're not the most common patterns, but where we are in the market, where there's a lot of cross currents, we do tend to see those a lot more, where something started off as a corrective bounce, but then it turns into an extension, and so that extension plays out as an ending diagonal because it started off as a corrective move. Jonathan asks, truncation is potential for corrective moves, but never for motive wave. That's not true. We have seen lots of moves, particularly like the fifth wave of the fifth wave can sometimes truncate, but at least at a small degree. It's not always the most reliable unless you have something that really looks like it should be a terminal top and has a significant reversal, then you can have to rely on truncation. So usually it's something that to consider if there are other factors, but not something that you can usually look for or rely on in very early stage. Sam asks, fourth waves typically hold within a 50% retrace. Does it not? So I said on NASDAQ here, so first of all, the fourth waves of diagonals often do retrace more than 50% of the third. They often get close to 50% or even to the 618 because that is where they're going to get overlap with the first wave. The only place that a fourth wave invalidates on a diagonal is if it gets over the terminal point of the wave 2. But if we stretch this out over here, we can see that the trend lines are starting to expand a little bit. And my preference and Garrett's preference on diagonals is that the trend lines are trying to remain parallel or contract, but you don't always get what you prefer. Sometimes you get a little bit more of an extreme extension. And there were some things that looked like they should have faded as a B wave and then gotten this move up, and they would have just been a little bit of a wider flat. And again, we came right into the thick of earnings season, and we were pretty compressed as a beach ball, and so the bounce happened as more of a straight line move, even though it does dissect into 3 waves. Okay, Simon asks, back on the SPX chart, the move down off the January high hit 1618, which supports ABC or completed wave 5 diagonal. I'm not exactly sure what you're talking about as far as the move down from the July high as an ABC. If you can clarify that a little bit more, I'll try and address it. All right, so I wanted to go to the Russell next. Oops, should be an C. There we go. So the Russell is another chart that Avi and I are counting very, very differently. And that is a potential challenge in Elliott wave, where you can have a valid count you can have two different valid counts. And so knowing, where one of them, where the commonalities are and where, what you should be seeing if something else is the case, I think is pretty important. So this lower low, I'm counting a pretty clear triangle here on the Russell that I think is the least bullish of the indices. It's the one that has held significantly lower in the B wave overall. It has a series of lower highs, and then off of this B wave high, I think we can be working on a 5-wave impulsive move to the downside, or could even potentially count this as all of 5 waves down as an impulse. So if this is Avi's more bullish B wave, setting up for a C wave up in an expanded flat ABC inside this B wave, coming all the way back up towards the 2100 region again, then obviously that relies on holding the 1639 region, and this should be a 5-wave move to the upside here. And this is a strong move that you could maybe squeeze in 5 waves, but I think it counts better as an ABC. So maybe it is working on a leading diagonal, but I can also count a small 5 waves down here. So again, looking for the points of overlap. If this is getting a wider flat as the wave 2, or even a wider flat as the wave 4 again, it should hold in the 1660 region. If it's getting a 5th wave to the downside, that really should be a 5-wave impulsive move. And this can be 1, 2, 3, 4, 5 as wave 1. It can get a corrective bounce that should stay under the 1750 region at this point, and then get 3, 4, and 5 waves to the downside to finish that 5th. The reason why I have this yellow count on here is, one, we can squeeze in 5 waves to the downside. IWM actually counts a little bit better as 5 waves down complete. Not only does it count a little bit better as 5 waves down complete versus the Russell futures, but when we look at the projected C wave for this move, this is the 50% fib for the C wave extensions, and a lower low takes this closer to the 618, which is much more in line with fib extensions of a 3rd wave as opposed to a normal C wave. So IWM would prefer to count 5 waves down complete, hold as a B wave, get a C wave bounce into early January for the wider flat, wider and higher wave 2. That should hold resistance in the 179s to 184 region, ideally, and then sets up a more bearish 2024 in my view. If it's more bullish, then it should hold this support here and get more than a C wave in a more bullish start to that possible C wave up towards the 2100 region. Okay, Simon's rephrased. Abnormal. I don't know if it relies on an abnormal diagonal target to get the. I mean, my preference here is, I mean, we did get to a 1618 extension, which is the further extension that you usually see in a diagonal. Normally, those hold better at the 1236 as the wave 3 of a diagonal. But here's where, even though we say each chart on its own, try and balance what we're with the index charts. I try and balance what I see from the other index charts and from the sectors and from individual names. And when we look at the tech sector or the NASDAQ in this, it did not get far enough for this to reliably count as a wave 3 of a leading diagonal or any wave 3. And this only got to a 1236 extension. So allowing for that to be the further extension of the 3rd in the SPX, just so that we can keep these on a similar trajectory, kind of makes sense. I also like to cover the RSP, and we'll finish up with the equity indexes soon, so we can move on to other things. RSP is something that Garrett and I look at closely in stock waves because we feel that it smooths out a lot of the signal noise that you get from those magnificent seven that really skew the market, and a few other things as well that are really the reason why you have such a discrepancy in the structure for both the NASDAQ and in the Russell compared to the SPX. And so when you look at an equal weight that adjusts for that, you can see more easily counts as a possible impulse to the downside, but my preference, again, even though I have the white is usually my primary unless I say otherwise, my preference is really to get a fifth wave to the downside, more like we were just looking at on the Russell, and we can see a possible little 5-wave move to the downside here. Now that could be an A wave inside this B wave, and still get a corrective move down and hold the 135s, and then get a swing up as the C wave of the wider flat for wave 2. But I would like to see a nominal, at least a nominal new low under the 132 region, and then a new ABC structure into this 145 to 147 region as the corrective bounce. So that's what we look at on the RSP. QQEW I think is similar. That's the equal weight version of the NASDAQ. Again, even more pronounced. Harder to count this as a 3, 4, and 5. Looks much more clearly like an A, B, C for the third, and then this is a corrective bounce, although this can count as 5 waves up here, but I think this is just a little extension of the C wave of wave 4, right to a 618 retrace, and ideally setting up to start that ABC move down, and then the corrective bounce right back up into this region. So can spend another couple of weeks rattling around in here to get people thoroughly frustrated before it decides that it wants to actually let go. And then the last thing, we'll take a quick look at the entire NYSE. I think this, I was really looking for this to try and hold as the fourth wave, that Garrett's fourth of the C, and get one more high, because the way that it topped here, and I do think that it topped as the B wave, the way that it topped, not only do you have to count a WXY for the B wave, which is not a bad thing. WXYs are a perfectly valid and common occurrence. But here, the Y wave also has to count as a WXY, which is a little bit less normal. But again, that's not something that you can look at from the beginning. So again, we were looking for this to hold as a fourth wave and get a fifth wave up in a C wave. So this would be A, B, and 1, 2, 3, 4, and 5 of C. But when that failed to hold and started to get deeper than the 15 350s, and then filled out what easily counts as 5 waves down here. But again, this could be just a fourth and get another fifth wave and then restart the wave 2. But just some similarity there from the NYSE, which is not quite the same as the RSP as an equal weight, but I think is something to keep in mind. At the same time though, this 5-wave move to the downside, because of how muted the Y wave is, and this is kind of where I think looking, while we say each chart on its own, I think it's important to recognize that what skews different indexes and what's going on under the hood, because you could look at this as an A wave up and an ABC flat for a B wave and allow for a C wave to come up and make a higher high for this B. That's a perfectly valid interpretation of this wave structure since the February high, is an A, B, and 5 waves down as a C wave for a flat. I don't have that even as an alt on my chart, again, because I think that the reason why this is more muted is because more of the stock market, absent some of those magnificent 7 that skew the NASDAQ and the S&P, things are far less bullish under the hood. So that's my 2 cents. That's it for equities in general. Let's move on and talk about energy briefly. We'll look at oil. I think we'll look at oil. There we go. We'll look at the oil chart. Counting this as a fourth wave back here in May, can have a 5-wave move up for the A wave, filling out an ABC move down for the B wave into our ideal fib retrace region. This so far looks like the ABC of 3 in a diagonal structure. So ideally bouncing, getting a good bounce up towards the 80-81 region for a fourth, but then likely to hit one more low under 74, possibly closer to the 72 region for that B wave to bottom. And that really would set up a very, very nice swing. There's a number of energy charts that Garrett and I are very bullish on in stock waves, as well as XLE and XOP. But because not everything counted the same way as a clear low for a fourth wave back here, and there's a lot of discrepancies in some different energy names, so it's not in all the same market, and we're not bullish on everything the same way we were back in early 2020 and again throughout 2021. We got a nice retrace on most things and have a lot of bullish charts, but it is not a throw a dart at all of the energy stocks and everything works out just great kind of market anymore. All right, let's look at natural gas. Nope, not QGC. That would be gold. This overbearing and clueless. Let's try that. There we go. All right, natural gas chart. So this is the back adjusted. Oh, maybe I stopped. I wasn't using the back adjusted on natural gas because it was extra not skewed. Let's just try this. There we go. All right, so less reliable for this bottom that actually bottomed in April in natural gas as opposed to May in oil. Less reliable as a significant bottom because it was so deep, but it just doesn't really fit as a fourth wave or anything like that. But off of that, we can count 5 waves up as a leading diagonal. This C wave of the 5th got a little bit extended, but this should be working on at least just the A wave and getting a B wave bounce and then a C wave down. If this really stops right here and bounces, then I think this might be only an A, B inside a bigger ABC move. So if it stretches down a little bit more into the 280s, then I'm more inclined to move this A wave over and just give it a smaller initial A wave. But probably, especially if it's going to bounce sooner here, I'd be looking at this more like this. So it has more work to do before it can be reliably bullish for a swing move, in my opinion, versus oil. But filling out more of an ABC into this 250 region is certainly bullish for a nice swing move, at least a measured move relative to the move from April up to October. All right, now let's move on to the metals. Nope, that's the wrong chart. We want QGC back adjusted. All right, so the only difference really that Garrett and I in the Metals, Miners, and Agriculture Service are charting gold versus Avi is I think Avi's counting this as a very deep 4th wave and then an extended 5th wave up for a 5-wave move, wave 1, and still a wave 2 that came down to a 764 retrace. Whereas Garrett and I, especially when we look at so many of the individual names, count this as an ABC up for an A wave, and then 1, 2, 3, 4, 5 waves up for a C wave, even though it only hit a 0.764 extension versus the A wave. This clearly looks like an ABC on many other individual mining stocks charts. And that with the wider and deeper retrace to a 764 has us looking at this as a larger diagonal structure. So in the third, we are looking for an A, B, and a C wave move up. And within that A wave, we can be filling out the A and the B wave inside that A wave. So similar to what we're looking at on natural gas, we'll look at silver in just a minute. But if we look at gold by itself, based on the normal fib retrace region, which we say are for B waves and wave twos, we're looking for a 382, a 0.50, or a 618, or anywhere in this target box. I just use the localized fib tool instead of drawing a box most of the time, but that's our ideal sweet spot. So if we're going to stop a little bit shy of the 382, or even if we do come just inside the 382 retrace, normally the default is going to say, well, yeah, that could be all of the consolidation, but it could easily get a wider and deeper flat. And so that's what's illustrated here with the yellow ABC. Sometimes I might put the wider and deeper flat as my primary and put a little green note, wave note here for all of the 2 or all of the B wave, depending on what we're looking for, saying, normally we would like to see a larger, wider flat, but there is a chance that this could be all of it. Here, as many of you guys have asked, as far as my color coding, white on a black background is always my primary. And I use color coding to try and put emphasis on some other things. Here, the emphasis was on looking for an ABC structure because we're looking at this as a diagonal, and that's what we're looking for as a possible leading diagonal in the minors. But here we have ideal is that this is completing all of the B wave, and then that sets us up for a nice measured move that should get closer to the 76.4 in the green fibs there. But we do need to allow for the potential of this being getting that wider and deeper flat. And so the difference here is that this yellow B wave would be a clear ABC bounce into resistance, whereas if we're starting the C wave up soon, that should be a clear 5 wave up move past that B wave. So instead of an A, B, and a C to the yellow B, we should get 1, 2, 3, 4, and 5, and then hold a corrective retrace from that as that wave 2. So that's going to be the main difference there. But again, why I think that this should be all of the retrace in gold, even though it's on the more shallow side, is because of the way silver counts. And on one hand, silver counts as a smaller degree behind gold because this was a much more muted move, but that means that it has more room to get higher and fill out more moves to the upside to get to that same target for the larger A wave inside the parentheses wave 3. But here we already have have silver down to a 50% retrace, so it has less room to get that wider and deeper flat before it starts to run into trouble. So it would really behoove silver for this to be all of the consolidation. And when we zoom into the chart on silver, we can see a possible 5 waves up already as microwave 1 and a corrective retrace that's trying to hold as a microwave 2 inside what can be the wave 1 of its projected C wave, which is 1 degree smaller than the one on gold. And that's because if we want our A wave to head up towards the 764, then a measured move only gets us to about the 0.50. So we have that as the C wave inside a bigger A wave of this A wave. And then coming down as the B and a C wave and an even bigger move. But this could stretch to the 2630s and just be all of that A wave, or even could just stretch all the way up to the 2780s as all of this A wave. More in line with gold, not going to complain. Again, when we look at that structure, you don't have to bet that this is going to get to 2780 as all of this A wave. You know, this is included in that. So if you're going to trade with the risk reward in mind of, you know, the B wave holding here and targeting the 2550s, if it goes past that, unless you've done some really weird types of complex option strategies, you shouldn't be in trouble if it goes past that target. And then quickly, we'll take a look at GDX. I'm going to go to the larger time frame here. Garrett and I also are viewing GDX as a larger diagonal. So the move off of the 2020 low was the start of the primary wave 3, but that was an A wave instead of wave 1 of 3. And then we have this very, very wide, deep retrace for the B wave inside of that primary wave 3. But off of that October or September 2020 low, we have a really clear 5 waves up for wave 1 and a corrective retrace to a 618 fib for wave 2, and are trying to start this wave 1 of the 3 inside this bigger C wave swing move up. So great opportunity to come check out a lot of the amazing individual mining stocks that we have as wave setups for in our metals, miners, and agriculture service. We should talk about bonds now. Let's go to the treasuries. Looking at the 30-year, and what had some really good bullish potential back here earlier in the year failed to hold numerous corrective retraces, and then went on to break down from that in a bigger 5th wave to the downside. In that bigger 5th wave to the downside, it really looks like this bounce is only a 4th wave. Now, it can still be just the A wave in a wider flat for that wave 4. So we could still call this an ABC up to here and look for a B wave to hold and then come out here as a wider flat. But with this getting closer to a 382 and a 50% retrace already, I think the bigger risk is that this is completing all of that wave 4 and is going to just set up to drop in that ABC move to the downside for wave 5. What's going to be a little bit, you know, what's always challenging when you have the potential for a corrective retrace to hold, but you're also looking for a corrective move to the downside, that this A wave of the 5th is going to be almost identical to this possible B wave in purple. So that doesn't mean that you can't trade for the potential for the purple C wave. It just means that, you know, both of those counts are looking for a move down into this 108 region. And from there, if it's a clear ABC, then you could try along, because you have very clear parameters of where that should be holding as support and a good risk reward setup. But if it's clearly only a corrective bounce to the 113 region, that's where you should, you know, tighten up stops and or just look to flip short again for that possible final drop, which could easily extend down to the 101 region or even below. And transferring that over to TLT, which, remember, TLT is kind of a mix of durations between the 10-year and the 30-year to get to a 20-year plus Treasury duration. Maybe it uses some 20-year load. So again, here I lean a little bit more to the 4th wave getting higher, but again, it's going to rely on that holding as the B wave, and this is easily all of the 4th wave completing. So the risk skew is no longer favorable at this moment to be long TLT unless you are comfortable relying on it holding a 6.5% drop or more. And if that breaks, then it's easily heading down under 80. Let's look at the dollar, and then remind me if there's anything else that I'm leaving out, or if there are any other questions before we end for the evening. I really like this expanded flat for a B wave on the dollar. So we can count, I can count a major top in place, whether it's a 5th wave or a C wave that completed at the cycle degree, and a 5-wave move to the downside for an A wave or a possible wave 1 at a primary degree, and an expanded flat as an A, B, and 1, 2, 3, 4, 5 waves up as a C wave, right to a 50% retrace, and a drop. That drop so far is not 5 waves down. And this can even count as 5 waves up off of that low. So you can treat the 104.65 level as a key low in place and treat this as bullish, maybe at least for a move up towards 106.30 if it's going to hold support in the 105 region. But a drop under 104.60s, and this should be, even though this isn't 5 waves down, this should be 1 and 2, and working on a 3, 4, and 5 for wave 1, or maybe this entire move to the downside is going to be as a diagonal, and this could be working on an ABC for wave 1, which is probably going to yell at me when I snap that in place because I did this as an impulse, and impulses can't subdivide into ABC for wave 1, but the one thing that I think that motive wave needs to change is that I should be able to change by right clicking on the impulsive structure here. I should be able to change this and toggle it from an impulse to a diagonal rather than deleting the subwaves and replacing them with a diagonal structure. But that's just a gripe about motive wave. Otherwise, motive wave is pretty amazing. Kurt says, so taking the charts on their own, the metals could rally even if interest rates rise and TLT falls. I definitely do not see a lot of times that there are things that tend to move in phase with each other. But if you think in terms of sentiment and the charts being fractal and the same patterns playing out, then it's easy for charts to fall in phase and not always be perfectly correlated or inversely correlated. And there are arguments that are made for correlation tend to fall apart, at some point when it does the complete opposite of what you would expect from the prior arguments of correlation of whatever two instruments you were tracking based on a correlation argument. So yeah, I definitely see those separately. We can take a quick look at platinum. Platinum is getting pretty far to a limit here. If this is an immediately bullish setup off of the 2022 low, it really needs to hold the low that it made in October. And it's getting pretty close to that already. But ideally, counting this as an ABC up, very similar to gold off of the 2020 low. Well, actually, much larger degree going further back, but a big ABC retrace to, or WXY to the 618, and a 5-wave move up for the A wave inside the A wave of that primary wave 3. But really need to see platinum hold right here, and it is certainly struggling to do so. C waves can be either impulsive or diagonals. So there's no, sometimes other contexts you'll have an idea of what kind of C wave you should expect, but as a general rule, there's no general rule. They can be either or. All right. Oh, there's a request for URA. Normally, this is something that we cover in the Metals, Miners, and Agriculture service, as well as in stock waves, not something that's covered in these videos or in the main market section. Garrett and I are very long-term bullish on uranium, but this is not a very reliable low for all of the primary degree retrace, whether that's a B wave or wave 2, depending on the chart that you look at, the individual uranium chart. If we can hold as a 4th wave in the 23 region and get a 5th wave up, then I will start to brighten this green wave 2 more and lean towards a corrective ABC holding from that 5-wave move up as a parentheses wave 2. But my preference, despite this getting a little bit higher than ideal as a B wave already, is that this is trying to start a C wave to the downside in a wider flat. So stay tuned there. Yep, XLB and DBA are covered in Stockwaves and the Metals and Miners and Agriculture Service. All right, I'm going to go have dinner with the kids and get this uploaded for you guys. I will see you later. Have a great evening.